Live from Bell Direct in Sydney. Julia, great to have you on board with us. Thank you so much for joining us. And we mentioned AGL, obviously, well, it was the worst performer today, along with Origin Energy taking a hit. Obviously, the competition regulator now proposing what's being called the biggest shake-up of the power sector in around 2 decades or so. What's the outlook for AGL in your opinion?
Leanne, I think the utility sector has been under pressure for a while here, and that's as regulatory risk has increased in this space. We know that competition tends to be the worst for the largest players in the sector, and the largest players in this sector are in the listed space, Origin as well as AGL Energy. Recently, we heard that both AGL Energy and Origin would both set FY19 tariffs either flat or slightly lower, and so we know that there's already been impacts in terms of this space, especially with Alinta targeting the East Coast and expansion in this space. But today we heard that there could be underwriting of baseload energy for new low-cost energy projects, and that of course speaks to increasing and intensifying competition in that space. So unsurprising to see the utility sector, the worst performing area, and AGL Energy, which is probably the most exposed to this, dropping around about 7% on the Aussie market, and also Origin Energy coming under pressure. So look, it's intensifying competition that these particular measures look to encourage. That will be bad news for the biggest players in that space. And we've seen it time and time in other sectors on the Aussie market, what increasing competition does to the incumbent and the largest players in the space.
As you mentioned, AGL down almost 7%, Origin Energy down about 3.6% today. Julia, another one of those that took a hit, and again, not coming up on the screen there, but it was down 3% at the close. That was Ruralco. They came out with an update to the market there with respect to their underlying net profits. I guess like many of these agricultural stocks, they are suffering from really dry conditions. You know, in Australia, of course, falling cattle prices. What did you make of that update today from Ruralco and the subsequent reaction on the market?
Look, if we have a look at Ruralco, there's 3 things that I look at as potential levers that impact on the share price. First of all is the weather, and look, we have seen an extremely dry season here in Australia, and that impacts on things like livestock prices, feed prices, as well as winter crops. So in this area, what you're hoping for is rain to come through to ease some of those agricultural conditions in northern New South Wales as well as in Queensland. Secondly, this is a company that is undergoing a cost out program, so that's an important detail that that impacts on profitability as well. And then thirdly, the acquisition program, but it's mainly the dry weather in this space that is impacting, and they have come out with guidance which is slightly lower than what I was expecting for Ruralco. So unsurprising that the share price is coming under pressure, but it shouldn't come as any surprise. We've had a number of updates now from agricultural stocks which have referenced the drier weather that we've seen and the lack of rain that we've seen on the East Coast that has led to pretty challenging conditions, and that means that we're probably going to see smaller winter crops as well.
Yeah, absolutely. Look, just to be fair as well, it did in the company. Look, let's move on. Julia, we're almost out of time, but I'd love to just get a thought, I guess, more broadly on the market today. Once again, we were dominated by trade talks and the escalation in this tit-for-tat trade war. We're watching to see how those US futures markets track tonight. And of course, well, today seems like we've fared a little better than markets around the region. Where to next? What happens now? What are you looking for?
Look, I think in the short term we're going to see a little bit of a battle between short-term outlook versus more medium to longer-term outlook, and that's because in the short term we will see second quarter earnings start to dominate the news cycle over in the US. But medium to longer term, this trade war is important, and mainly it has to do with the gap of Chinese goods versus US goods to each country. And I guess if we have a look at last year, we saw 130 billion US dollars worth of US goods going to China, but if we have a look at how much worth of Chinese goods went into the US, it was over 500 billion US dollars. So I guess the key here is now we've seen these tariff retaliation, and the US announcing tariffs on an extra $200 billion worth of goods. So this tit for tat, well, there's not really a lot more room for tit for tat because China just doesn't have the type of exports to the US that the US does to China. So I guess the speculation is now that we're going to see an escalation in terms of the services side, that China could be targeting services rather than goods, things like tourism, education, as well as banking. So look, this is going to be something that if we do see further escalation will impact on the medium to long-term view of the markets. But come Friday, I think we will see a rebasing on some of the company fundamentals, and those outlook statements are going to be absolutely key.